Have you ever watched Bitcoin spike or crash and thought, what on earth just happened? No big news, no big hack, yet the whole market flips from panic to euphoria in a few hours. That is crypto market sentiment at work. And if you can read crypto market sentiment, you stop feeling like the market is random and start seeing the emotional pattern behind those moves. In this video, you are going to learn what crypto market sentiment actually is, how it's measured, how to use it in your investing, and how to avoid the classic mistakes people make when they follow the crowd. We will talk about things like the Crypto Market Sentiment Index, the Crypto Fear and Greed Index, social media crypto sentiment, and simple sentiment-based crypto trading ideas you can apply even as a beginner. By the end, you will know how to use crypto market sentiment as a tool without letting it control you. Let's start with a clear idea. Crypto market sentiment is simply the overall mood of traders and investors about crypto right now. When people feel excited and confident, we say sentiment is bullish. When people feel scared and tired, we say sentiment is bearish. You see crypto market sentiment in the price, but you also see it in the way people talk on Twitter, in YouTube comments, and in Discord chats. You feel it when everyone is saying, "This time is different," or "It's all going to zero." This matters because sentiment tends to drive short-term moves more than fundamentals. A strong project can still crash if crypto market sentiment turns ugly for a while. A weak token can still pump if the crowd gets hyped. If you invest only by staring at the chart and ignoring crypto market sentiment, you will often buy when people are the most greedy and sell when people are the most scared. When you add sentiment into your view, you start to see when emotion is doing most of the work. So how do you actually measure crypto market sentiment instead of just guessing? One popular way is with a crypto market sentiment index. Different sites build these indexes in different ways, but the idea is similar. They take data like volatility, volume, Google searches, and social media posts, then turn it into a score from fear to greed. When the crypto market sentiment index shows high fear, it means most people are nervous. When it shows high greed, it means most people are chasing gains. You might also hear about the Crypto Fear and Greed Index. This is just a specific type of crypto market sentiment index that has become very popular. It gives one number from 0 to 100 and a label like Extreme Fear or Extreme Greed. Many traders start their day by checking this Crypto Fear and Greed Index. On its own, it is not a magic signal, but it gives you a quick snapshot of crypto market sentiment today before you even open a chart. Other tools dig deeper. There are crypto sentiment analysis tools that scan news headlines and social media and try to rate them as positive or negative. Some dashboards show social media crypto sentiment for each coin, so you can see if the crowd is talking more about Bitcoin, Ethereum, or some new meme coin. When social media crypto sentiment and the Fear and Greed Index both show extreme excitement, you know the market is heating up. When both show fear and anger, you know people are tired and stressed. On top of that, you have on-chain sentiment metrics. These look at the blockchain itself to see what holders are doing. Are coins flowing from exchanges to cold wallets, which can signal long-term holding, or from wallets to exchanges, which can signal a plan to sell? Are most holders in profit or at a loss? These on-chain sentiment metrics give you a peek into behavior that people might not share in public posts. They add another layer to your view of crypto market sentiment. Derivatives. Data brings in even more detail. Funding rates and open interest in crypto futures show how traders are positioned. If funding is very positive, it often means there are many leveraged longs and greed is high. If funding is very negative, many traders are short and fear is high. Rising open interest can mean positions are building. Falling open interest can signal that traders are closing and stepping aside. When you see extreme funding, high open interest, and a greedy crypto market sentiment index together, you know the market is crowded on one side. Now, how do you turn all of this into something useful for your investing? The key is to treat crypto market sentiment as context, not as a standalone signal. For example, if the Crypto Fear and Greed Index is sitting in extreme fear and social media crypto sentiment is very negative, you know people are already scared. That does not mean you must buy right away, but it might mean this is not the best time to panic sell your long-term holdings. In the same way, if the index screams extreme greed and every friend is bragging about gains, it might not be the ideal time to go all in. One simple approach is to blend sentiment with your time horizon. If you are a long-term investor, you might use crypto market sentiment to help with your entry timing, but still focus on strong projects and clear plans. When fear is high and prices are low, you might choose to add slowly, knowing you are going against the crowd. When greed is high and everyone expects easy gains, you might slow down your buying or even take some profits. The sentiment does not change what you want to own. It changes how aggressive you are with your buys and sells. For more active traders, you can build a basic sentiment-based crypto trading strategy. For example, you could decide that you only take long setups from your chart when the crypto market sentiment index is in neutral or fear, not in extreme greed. Or you might only look for short or hedge ideas when greed has been high for many days. You layer this on top of your normal technical analysis. Price structure still matters. Support and resistance still matter. But now they are filtered through the lens of crypto market sentiment. You can also look at how sentiment and dominance interact. Bitcoin dominance and risk appetite are closely linked. When dominance is rising and Bitcoin market sentiment today is still fearful, it often means people are hiding in the safest major coin. When dominance is falling and the altcoin season index is rising, it can show that risk appetite is back and people are moving into smaller coins. Pairing Bitcoin market sentiment today with these indexes helps you decide whether it makes sense to be heavy in altcoins or to stick mostly with Bitcoin and stablecoins. Of course, there are traps. One big mistake is refreshing a real-time crypto sentiment dashboard or API every few minutes and trading every tiny change. Crypto market sentiment is noisy. It is normal for fear and greed readings to jump around on short time frames. If you react to every small move, you end up overtrading and paying lots of fees while your stress stays high. Better habit is to check sentiment a few times a day if you are active, or a few times a week if you are long-term. Another mistake is treating sentiment tools as if they predict the future with certainty. Extreme fear does not guarantee a bottom. Extreme greed does not guarantee a top. These levels show you that risk is higher in one direction, not that a reversal must happen today. When you see crypto market sentiment at an extreme, the smart move is to respect that risk and adjust your position size, not to gamble everything on a single call. Your focus should always be on survival and steady growth, not on one lucky trade. So let's pull this together. Crypto market sentiment is the emotional engine behind the price charts you watch every day. You can read it through tools like the Crypto Market Sentiment Index, the Crypto Fear and Greed Index, on-chain sentiment metrics, funding rates and open interest, social media crypto sentiment, and Bitcoin dominance. When you learn to read these signals, you stop asking, "Why is this move happening?" and start saying, "This move fits how people feel right now." You get less shocked by swings and more prepared for them. If you treat crypto market sentiment as a guide, not a boss, it becomes very powerful. It can stop you from panic selling at the bottom. It can nudge you to take profits when emotion runs too hot. It can help you time your entries and exits with a little more care. And it can protect you from getting swept up in the loudest voices on social media. Over time, this calm, structured approach to crypto market sentiment can make you a more confident and consistent investor. Now, I'd love to hear from you. How do you feel about the current crypto market sentiment today? Do you think we are in fear, greed, or somewhere in between? Tell me in the comments what tools you use, or which ones you want to try after this video. If this breakdown of crypto market sentiment helped you, tap like so more people can find it, and hit subscribe for more simple, clear crypto investing videos. And if you want a deeper dive into any of the tools we mentioned, let me know which one you want a full tutorial on next. Have you ever